So good morning, colleagues. Again, my name is Brendan Trust. I'm the Maxine today. I'll be ushering you through the days. Yeah, I think the problem with recognizing 10 years of this event is that you realize how old you are if you've been around from the beginning. I think myself and Rulof, if I remember, Rulof was still at Treasury and we co-convened it together. We co-hosted it, the first one. Very successful event. We didn't think then that we'll be able to sustain it for 10 years. That's when Rulof and I had our first fight, I think, when we were organizing that. And it hasn't stopped. So welcome, colleagues, to the second day of the forum. You all look fresh though today. Huh? There was no partying, and yeah, our apologies. Rado said we don't have a budget to do a proper celebration in the evening, but I'm sure this year or the next time we meet, we will have something. I think it's worth celebrating. 10 years of us doing and pushing and promoting financial inclusion in the region. When we started it 10 years ago, actually, financial inclusion wasn't a priority at all, either at SADC or I think within all of the countries or most of the countries that we work in. I don't think there were any financial inclusion strategies that were developed at the time for most of the countries. And the picture today has completely changed. Today, it's a priority within SADC, with the Secretariat. Ministers of Finance consider the issue and have supported the initiatives that we've undertaken. We've just completed a 5-year CBE program that promoted financial inclusion for consumers and for small businesses. So a lot has happened in the last 10 years. Of course, the more we succeed, the more challenges we have to face, and I think that's something that we've already reflected on yesterday. So today's session, the agenda has changed slightly. Mike, are you putting it up? So we're starting off the day with the presentation on the TCIB scheme, which will be followed by a panel on digital public infrastructure. That panel is virtual. All participants are going to be joining us virtually. Tea break. Hopefully we can make up some time there. And then after lunch, after the tea break, we will have an interactive session on financial health. And one of my colleagues will facilitate that. For a change, you won't be sitting like this in this room, but you'll be moving around and have the opportunity to interact a lot more. We'll then have lunch. That's the major change. We had to move lunch earlier because the facilities can't accommodate a later lunch. We'll have lunch at 12:20, and then we'll come back for the final session, final 2 sessions, which is a discussion on capacity building for financial inclusion in the region. And thanks, and we'll have a bit of a reflection on those that have been around. What do they value from these forums, and what potentially do you think we need to change? We will have a formal feedback form that we will flight, but it will just be good to get some reflections from different country participants. And that's going to be our day, and we hope to be out of here by 2 o'clock so that you can all either go shopping or go home, one of the two. So that's the agenda for today, colleagues. I'm going to invite Tsepo up to do the first presentation. Tsepo Rakibane is the head of stakeholder engagements for the rest of Africa at Pay Inc. You may have known it as BankServe, and if you were listening yesterday, there was a discussion on the PEM where they talked about where they talked about the Reserve Bank what do you call, taking equity in the switch in BankServe, and they've now changed the name to Pay Inc. So Pay Inc. is what BankServe used to be, with the Reserve Bank on it to create a public utility. That's what they have. We've talked about TCIB, I think, in these forums before, and the cross-border scheme that was introduced started working on, I think, more than 10 years ago. Around 10 years ago, the first discussions around it. But the idea was then to create a cross-border switch, because that didn't exist, and to support the wholesale settlements process, which was under the SADC RTGS, and this was on the retail side. So Tsepo is responsible for it, and he will talk us through his presentation. I think you're running the slides from there. Please welcome Tsepo for the. Just press this one.
Yeah. Okay. Good morning, everybody. I hope you're well. Firstly, I'd like to thank the chairperson, the regulators, all distinguished guests for inviting Pay Inc. to do a presentation, give you an update on TCIB, which is transaction cleared on an immediate basis. I know that everybody knows it as TCIB, but it is transaction cleared on an immediate basis. So I'll go through a couple of slides, which is just to give guidance to my discussion. So it will be executive summary, market usage, and reach. Then we'll also do a little bit of some of the strategic matters that we are dealing under there. And then also look at the dashboard from a volume perspective, and who's participating in the moment. And I think we do have a slide as well, which gives a view of the potential participants that we will be joining. That would be more or less the presentation. Some of the slides are there to confuse you so that you don't ask me questions. So please don't mind them. But TCIB is currently focused on working with the PSS from a what we call minimum viable product or minimum set of activities that the hub should have, which is an initiative that comes out of the PSOC. We do have a product, but it's something that it's not maybe. It might be easier if everybody has a minimum set of products or set of items that the product has. We're working on that one with the subcommittee. There's quite a few committees in order to revamp TCIB from its current format. And probably it will stop being a middle mile service to becoming a service that actually can go from the first mile to the last mile. I think it's one of the items that are a challenge at the moment for participants that are already in place. So that is the one thing that we are working on. And then that is the hub and spoke model. So where we're connecting the spokes of the spoke, meaning the local infrastructures into TCIB. We currently have about 8 of the 16 SADC countries that probably would be ready by 2027. And then we'll be working with those spokes in relation to the TCIB. We are also enhancing the governance of the scheme. It has been for a while that we have not changed the governance of the scheme, and as more and more people are joining TCIB, we are finding that the governance of that scheme are actually coming to question. But it's something that we're working with the market. I mean, when I'm saying the market, I'm meaning the current participants and also the work that we are doing with the PSS. And as we all know that every product must have a roadmap. One of the roadmap items that we're doing is looking at the AML, sanction screening and fraud, which is something that we believe that any instant payment service should have, because of the faster the payment could be faster the fraud. It's something that we are working tirelessly to land it. But from
sorry, Tsepo. It seems like there's a problem with the sound, the volume. So if people can't hear, you can use the headsets. You'll be able to hear it louder. Anyone who's struggling to hear Tsepo properly.
Or is it my volume? I can speak. I can have my, what is it called, the mother voice?
Your
I can try it, yeah.
outside voice.
Yeah.
You can use your outside voice. Yes. Thanks.
Okay, outside voice. Sorry.
Bring it closer. Bring the mic closer. I saw that on the Zondo.
Doesn't seem to move. Okay, let me try my outside voice. Yes. Then from a participant perspective, we currently have 47 members. And I must say that number is deceiving because of not all these members are transacting, but it's members that are in the process to come live. So out of the 47, we do have 7 that are participating, which is a bank in CMA and 3 other participants within Zimbabwe, Zambia, and also in Botswana. Yeah. And then we also have in that pipeline, we do have 3 participants that are already have commenced the onboarding. They should have actually gone live on the 3rd of March, but due to some difficulties between regulator and some of the issues that they have technically, we could not put them live. But in essence, we are more looking at a market adoption to start to increase from a TCIB perspective, which is largely fueled because of there is a CMA directive, and then we expect financial institutions to then start processing through TCIB. And we're also expecting out of those 3, 2 of those are MTOs and a bank in the markets that we are actually not represented. So between now and 2027, let's say next year, this time 2027, we should see a more adoption from a TCIB, and then the market should be using the service. So I thought I also put a few call it our reach and usage where we believe we could add value. We do believe Hub and Spoke will give us the lift from a usage perspective, and that will actually give that inclusion because of most of the spokes do have non-banks already connected to the spokes. So we are looking forward to that portion of that project, even though it's only landing next year. But we're already in discussions with participants that would potentially join the Hub and Spoke, and that as well. We also do believe that regulator engagements would be very important, not only for the Hub and Spoke, but for the market mobilization. One of the things that I think did not work well for TCIB for a while was because of the market mobilization was largely from TCIB only and not the involvement of the regulators. And we're seeing more and more with regulators now starting to get involved from a market mobilization perspective, and also with the some of the engagements that we currently have. TCIB as is, it supports most of the use cases. And then these would be use cases where there's a store of value, which might not necessarily be the cash use case. I think it's one of the gaps that TCIB has. But from a store of value to a store of value and account to account, TCIB covers all of the use cases. Does not cover the the merchant or person to merchant use case, given that we're using store of value, it's one of the items that we have for future services. So from that perspective, it covers, let's say, the base of electronic payments, which is also would help with the migration from EFT into TCIB. And then the platform itself, I think it can do more than it's currently doing, and it's largely because of the type of usage that we currently have, type of participants that we currently have. And we really do believe that the more use cases that are business and also merchant related are actually experienced, are actually explored, it would be something that will actually give us the volume lift that we require. Then from a strategic market positioning, I think at the moment it's a middle mile and we should do more. But some of the initiatives that we currently have, I do have a busy slide of where I believe that we can actually start moving towards the first mile environment and also the last mile environment, and with some of the initiatives that we currently are looking at. Then from some of the, for TCIB itself, it is actually working towards financial stability. And for a very long time, TCIB has been either funded or using some sort of funding. And I don't think that it is the way a payment system should work. A payment system should be able to wash its face, using the term. But I think we are working towards that. I think we are looking at a break-even point into the 3rd to the 4th year from now on. But we can only do that once we have participation volume and use cases, and also some of the migration of transactions from other payment streams. Then from an onboarding perspective, one of the items, it's CMA because of the directive, but it only helps us with the banks. It doesn't help us with the wider market, which is the MTOs and the other service providers that are doing remittance in the market. But I think once you have at least a participants that can distribute on your behalf, then you'll actually start getting usage. Because of one of the questions is always that, okay, I want to join, but where can I send to? CMA will give us that lift, and also some of the initiative that we currently have. Zimbabwe spoke is connected, Zambia spoke is connected, and also we're looking at connecting Angola. And one of the items that maybe, let's say, corridors that would like to open in that regard would be the corridor for Zimbabwe, Mozambique, and also for Botswana. That will also help us from a volume perspective. As indicated, regulatory engagements are key for TCIB. It is a regulated system. It is owned by regulators. And we're looking for those engagements to start yielding the profit being seeing more members, encouraging participants in country to join TCIB from an engagement perspective, and also so that they encourage the corridor discussion between the regulators, so that we can then start seeing the volume growth. And we'll continue to onboard new members. We used to have a longish onboarding cycle, but now it's approximately 4 months, which is a little bit, it is an expressed, call it onboarding process. But I must say it is excluding some of the regulatory requirements that participants will need to do in country for their approvals. Should I pause there for questions, or do you want to do it later? Yeah. Yeah. Okay. And some of the items that I've talked about in my opening slide is around the governance. Currently, TCIB, it's a member-led scheme, and with some of the initiatives that are currently happening, we might move to a different type of scheme. Hopefully not a totally regulated scheme, so that we still have the member input into that portion, so that governance and the scheme of schemes discussions are currently happening. Hopefully by the end of this year, we'll have a framework which will actually make it, which will enable the governance of TCIB to be more of a world class, I would think, given some of the items that we are looking at. And from a pricing perspective, we have not increased our pricing since inception, largely because of there was a lot of funding in it, and we'll continue to do so. Actually, we're even thinking of reducing pricing or a bundle of free transactions within the pricing. Hopefully, it will encourage more participants to join that are price sensitive. But from a limit perspective, we are moving towards a 5 million limit per transaction. Obviously, not all participants can enjoy that limit, but it is largely to ensure that we can cater for some of the use cases and also some of the regulatory requirements that are already out there that requires us to have the ability to then transact at a 5 million. So that is a step change that we'll continue to do before April next year. And from a settlement perspective, currently we are using the SADC RTGS as a settlement platform. But we also did a proof of concept with the SADC RTGS where we can actually bring settlement and clearing close to one another. And then hopefully as well, it's something that we can implement with the hub and spoke model. If not sooner, it only just gives the ability for participants to clear on what they already have. That should be able to take some of the risk that we're currently seeing from a settlement risk, that there could be a settlement failure in the event that participants do not fund their account. So that is one of the items that we will be implementing just to address the issues of settlement risk. Maybe from a operational perspective, we do have FNB, all the CMA banks for FNB that are connected to the TCIB platform. We do have ZB Bank of Zimbabwe. Send Home, it's a non-bank that is in Zambia, and also First Capital. First Capital is a receiver at the moment, but we are also looking at expanding that portion of the corridor. So the new corridors that we are looking to include, it will be Eswatini, outside of the CMA, it will be Eswatini, and Zimbabwe again as a second participant. Yeah, so from a volume, they're still largely small compared to what we anticipated. But hopefully with some of the projects that we've already highlighted, that it will then start to increase from a volume perspective. I've been asked to put a little bit of challenges other than settlement. I think the regulatory challenges, it's something that our participants are experiencing, and we are working with the regulators to see how we can ease that tension from a regulatory perspective. Whether it's a timeline or the frameworks, it's something that is an issue. And then we need to find a way of how we can harmonize the regulation, which also include items like BOP reporting and what participants can transact for. And we also still have some commercial challenges as well, which participants find that they actually quite struggling from a, call it a technical know-how of how to then connect into TCIB, but how we aim to close that gap is that we're working on playbooks that would actually assist these participants, largely the non-banks, because of it's a different way of connecting into TCIB. We are working with a technical advisor to also provide us with the call it playbooks that technically, hopefully, it will address some of the technical challenges. From a commercial perspective, I think up until we can cover most of the use cases that the MTOs are requiring, we will continue to have this gap. And there is a need for us to then look at how do we then have use cases that are relevant to them, that as well do not cost as do not come at a high cost, and then solves the value chain from end to end, whether it's onboarding, currency, and settlement. And yeah, and I think those are largely some of the challenges. And maybe also just lastly, it's just on the volume and participation. Oops, I think this one was duplicated. This is my famous slide that I just didn't want comments on. This is just a roadmap. And I must say that this is a product roadmap for 2 years. It still needs to be rectified by PSOC, but it's more talking about the implementations that we are doing, the enhancements that we're currently doing with the SADC RTGS, i.e. currently we are only settling once a day, and then hopefully by November we should be able to settle four windows, which will take down the settlement risk. And then also the implementation of the directive. And then as a product, we are also looking at evolving that platform, the current TCIB platform, which is planned for next year. And obviously the hub and spoke for the 8 participants that we've discussed. TCIB, it's not a catchy name. So we are looking to also rebrand the name. Engagements have already started. We are hopeful that by the time we implement the MVP, we would have a new brand, fully a customer-facing brand that can cater end-to-end payments. And then some of the items there that we also have fraud and AML sanction screening that I think if it's centrally housed, it could assist participants. And we are working on that portion of it, which will probably land in 2027. And maybe lastly, some of the items that banks would like to have, which is the scheduled payments and bulk payments. I think that's the end of my presentation.
Great, thanks. Thanks. We're running behind time, but we have time for 1 or 2 questions if they are. Yes.
Thank you, Brandon. Thank you, Tsepo, for the presentation. I just have one question. I actually wanted to ask the director yesterday about the TCIB governance structure. I understand it's currently owned by the SAB and the South African banks. And then that you have designated to be a national payment utility system. So my question is, how do you balance the utility perspective with having the private sector as partners and probably having a profit motive? How do you balance that aspect? And maybe the second question is, what does this structure mean for the SADC community, them not being the owners, members of that governance structure? Thank you.
So maybe let's just take another. You've already taken the 2 questions, but are there any other questions? Nikki?
Yeah.
Press it will turn green.
Thanks, Tepu. You mentioned that there are MTOs joining, such as Send Money, and I'm quite interested in how. I see Send Money has a wallet, but obviously a wallet provider can't, the best they can do is payment initiation. They can't actually do the transaction. The Adler, or sorry, not the Adler, the AD has to. So how is that been? Because you need to get full bank sponsorship again, and it just starts adding to the costs. How is that happening? Because obviously that's part of the work we're trying to do in the MVP, and the current model, everyone needs a bank sponsor, 100% for settling and clearing, except when Adler, that only does for settling. Can you just tell us a little bit about how that's happening?
Okay, thanks. Those are the two questions. That question, the first question, I'm not sure.
Yeah.
Sounds like a broader question,
Yeah,
but let's see if you can.
Yeah, actually, I was hoping that maybe Arif could answer that, but you know, yeah. But I think the portions that I can answer, TCIB is owned by SADC, and Pay Inc. has been appointed as a scheme manager for TCIB. And then the regional clearing system operator, it's run out of Pay Inc. as well. But we do have a license that we get from SADC PSMB. So from and hence I was talking about funding. So TCIB has been call it segmented or separated from the normal Pay Inc. Operations, even though we're using some of the support services like IT, finance, and so on. But I just wanted to highlight that we are not a profit making. We actually running at a loss at the moment, given the number of the volumes and the revenue that we're making. And the SADC community currently is cross-subsidizing that portion of it. That is more on the how TCIB works within Pay Inc. But from a profit, I would rather leave it to the regulator, given that they do have a plan for how a national utility would work. But we could say that we are running as a utility for SADC, particularly for the retail payment system. Yeah. To deal with the second question around how non-banks would join TCIB, currently one of the entry and participation criteria is that they should have either some sort of a license. In SA and CMA and Zimbabwe, we want an Adler license. But in other areas, they must be either designated or been given a platform for them to do cross-border services. So it is a requirement that the regulator needs to approve for them to actually come and join TCIB. But over and above, which is the issue of settlement when they have to settle within the SADC RTGS, we then are using the banks that are currently on the SADC RTGS to assist with settlement. But I think the Omnibus project, it's what we are trying to do so that they are not dependent on banks for settlement. Actually, we have about 17 of the participants that are already on the pipeline. Either they are struggling for settlement for one way or the other. So that's how participants will join TCIB. They need a sponsor bank, correct? You are correct in that. But hopefully in the future, we don't need to go that route.
Great. Thanks, Tepu. I think that's all we have time for now. We need to catch up a little bit of time, but thank you very much for that presentation. I'm guessing we will get the actual presentation.
No.
You're not giving it to us. Rado, you wanted to say something? Not a question again.
Not really a question. Thank you so much. Thanks for the wonderful presentation. Maybe just to give some confidence to our member states. This project, TCIB, is part of the implementation of the SADC Protocol on Finance and Investment. You might be aware that we do have Annex 6 which speaks about payment system integration. We might not all familiar with all the projects under the Committee of Central Bank Governors, but just to provide some confidence to the member states that this is a regional project first. Number two, the intention is really for financial inclusion. That's why we have allocated this specific presentation for during this Financial Inclusion Forum, because we as financial inclusion practitioners and experts from the respective member states, we could play a critical role as an ambassador of TCIB, because this is a regional project. I thought it's important for us as a SADC Secretariat to just highlight those few points.
Sure.
Thank you so much, Brendan.
Sure, thanks for that, Rado. Okay, can we give Tsepo a round of applause? Thank you very much. Thanks. Hopefully we will be able to get insight into your slides soon. Okay, thanks, colleagues. So the next session is on digital public infrastructure. I'm sure you've heard this is a new fad, new name within our world, suddenly arrived and it's taking over everything. We have Desiree Kachenje, who is the moderator. Desiree, are you, sorry, Desire, not Desiree. Desire, are you online?
Yes, I am. I hope I'm audible.
Thank you. Welcome. Your panelists, Anud and Nefasatao, can you please switch on your cameras and be available?
Good morning.
Desire is a director Africa for the Co-Development Fund. Desire will say something about it, but it's a newish fund that is focused on supporting digital public infrastructure globally. And Desire, I see you now the director for Africa. I'm not sure. I think you had a promotion since we last talked. But I'll hand over to you, Desire, to introduce your panel and to facilitate our conversation. Desire, can I hand it over to you?
Yes, please. Thank you very much, Brandon. And thank you for airing out my promotion right here. But yes, I'm now the director for Africa, and I am very honored to be here today. So thank you very much. I have two panelists, so I'll just check if Mr. Bacha and Ms. Diallo are both in. I can see Mr. Bacha, Ms. Diallo. Yes, I can see you as well. So good morning, everyone. My name is Desire Kachenje. I am based off Dar es Salaam, Tanzania. I am part of a fund called Core Develop. So I'll give a little bit of a background about our fund, but basically we support or we give investments as well as other support to countries when they are rolling out digital public infrastructure. And of course, as Brendan had put it earlier, digital public infrastructure has recently become a very important global conversation. And the reason for this is because for the last couple of years, digital transformation had been a focus for most countries. Around COVID-19 and a few other factors had also shown countries that beyond just having digitization, these digital systems need to be interoperable, they need to speak to each other, they need to be able to better connect with citizens so that they can provide services, especially in case of emergencies or in case that physical movement is not able to happen. So a good example of why this became very important is around COVID-19. In countries like Togo, we're still able to provide financial support as well as telemedicine to some of the citizens who are farther away for where services were provided. So at its core, digital public infrastructure is just a different approach to digitization. And the way that we speak of DPI is it refers to the digital systems that allow countries to deliver services, and it allows better participation for citizens to build digital economy at scale. Particularly, we think of three main foundational digital public infrastructure layers. These are payment systems, identity systems, as well as data exchange. In the first few years, main discussions around DPI have been from examples globally, such as India's Aadhaar card, Brazil's Pixel payment platform, as well as Estonia's cross data exchange platform. But what I'm really interested in, or I really like right now, is that we're seeing African countries to becoming more on the front line when it comes to DPI, not only in rolling out digital foundational systems, but in solving one of the main questions we get right now that, yes, we have these digital rails, they are there, but how do they help us solve development goals? How do they help us solve development challenges? Or how can we make sure that our economic challenges within the countries are actually benefiting from the digital rails that have been provided? One of the main questions that DPI has been trying to answer right now is how does it better support financial inclusion? And today's discussion is very interesting because we'll focus on just that. Giving a few examples for core developers, we've worked very closely with FinMark Trust as well as the ECOWAS team within the West Africa region. With SADC region, we've worked closely with FinMark Trust to support the e-KYC, the financial e-KYC project, which supports to bring interoperability and introducing onboarding barriers, strengthening and trust across borders, and also improving access to barriers for financial services, especially for underserved populations. Similarly, in ECOWAS, the request has been the same. How do we ensure that there's integrations between the digital IDs so that citizens within this block can be able to speak to each other a little bit better using their digital IDs? If we go globally, we also have similar projects, such as a project that we're working with Red Health, and that project is also focused on how do we create digital ID integration for better payment services, for better data exchange services. So I will end there in terms of DPI and some examples, but happy to take any questions. For now, I would like to introduce my great panelists, which I will let each of them first introduce themselves, their role, but also if they could give us a brief view. So just to set stage, our discussion today will revolve around how does digital public infrastructure and ecosystems enhance financial inclusion. And so we'll have like a cross-country example from Mauritius as well as Seychelles. And so both my panelists can speak a little bit about this before we get into the questions. Ms. Diallo, can I begin with you, please? Thank you.
Thank you, Ms. Desir. My name is Nafissatou Diallo. I'm the Director of Software Development at the Department of Information Communication, Seychelles. The ICT is responsible overall for the digital transformation of Seychelles government. So we have the huge responsibility to identify the major digital system for government, like key registry from the foundational system, like our national identity document number. We are responsible for the system like the registry for business registrar, immigrations, as well as now, as you have mentioned correctly, for us to roll out key DPI layers across the countries. And today, one of them I'll be presenting after this introduction. So basically, the ICT, I'm representing the ICT. We are yes, I'm representing the software development side, but we're also responsible for the government infrastructure, including the data centers for our government system, as well as the government network, which we call electronic government networks. So we have a huge responsibility in order to drive, but we have a lot of partners in regards to either international partners or within Seychelles, we have other government entities that is helping us in driving the digital transformation. And we have a huge project that we are currently deploying from the enterprise HRMS to IFMIS, which is being done by the Ministry of Finance. And we, in this partnership, we are providing interface integration layers for that. Thank you very much.
Thank you very much. Mr. Bacha, over to you. I think you're speaking on mute. If you could unmute.
So good morning. So I'm Arnaud Bacha from the Digital Innovation and Payment System from the Bank of Mauritius. So in the Digital Innovation and Payment System at the bank, we look after several systems. So we have the main system, the RTGS system, but we also have the national switch, the MOCA switch. The MoCA switch is there to switch payments for QR payments, but also for card payments locally to ensure that all QR payments are interconnected for all banks. And we are also the operator of the central KYC system. On the MoCA switch, we are connected today to UPI for cross-border transactions. And we're also working with TCIB to connect as a project to the TCIB system, as Tsipo was saying previously. So that's it. Thank you.
Thank you very much. So I would like to begin with Mauritius, if you don't mind, Mr. Basha. So just if you could explain to us, why was it important for the government to take like a leadership, the Bank of Mauritius to take a leadership role in this and not just allow these financial service providers to connect directly to the government info highway? Can you speak a little bit about why that was important and how the journey began?
So it was important for several reasons. The first one was there was a demand. So there was a demand from financial institutions to have something central for all the KYC, but there's also the requirement from the FATF to ensure that we have we improve all things related to the KYC, the due diligence, and this the continuity of the due diligence of customers. These are the main drivers to start the implementation of the CKYC. So based on that, the Bank of Mauritius Act was updated to introduce the fact that the Bank of Mauritius will be the central party to connect all participants to give access to the central data for the KYC.
Thank you very much. And what were some of the key foundational elements that were required to make the CKYC platform operational? Were they legal, governance, institutional, or technical? Just the ones that were very important, especially as you began the process.
I think that there's about a bit of all of that. And there's, for example, one part that was crucial is the data protection, because when you have a central repository where you will collect all data from everyone, so there was some the data protection part was very important, and we had to give everything that was required by all parties to ensure that we will protect properly the data that we are collecting. That's why it was it is sitting the central KYC sitting at the Bank of Mauritius, and all participants must ensure that they will have their customer consent before sending a request to the central KYC. So this is one. The other important element is that instead of being a place where we store data, so that the bank collect and store data at the central, what was decided is the bank will act as a switch and will connect to all source of truth. So that instead of taking the data and building a database, a central database, we choose the architecture to go and fetch the data in each institution. For example, we'll go and fetch the data from the central population database to get the customer details, date of birth, the photo, and all this kind of information. We'll go and fetch it from the central population database. Same thing, for example, to the police to get the information of the customer for his driving license or the proof of address. So we go and fetch it from the source of truth, so that we ensure that we will not have expired data at the bank at the central switch. The main things, yeah.
Thank you very much. I think you answered my second question a little bit. So one of the main questions we usually get, or what we're hearing a lot from different countries, is that there's a lot of fragmentation when it comes to registries. Different data belongs in different spaces, and this costs time, and it also becomes less effective when we are trying to create similar platforms. So from your experience, how long did this process take? And what did you think was the one element that you really needed to use to make this process a little bit quicker or more effective?
So, and I agree with you. It was a long process and quite complex process to collect the data from all parties. What was required is to have an MOU with all these institutions. We had an MOU with all these institutions, and just to add that the process is not completed. We are still working to add more institutions to collect more data, and so that we are still in the process of having other MOU to ensure that when participants are querying the central KYC, they can have additional data from other sources. Today we have source from the central population database, from the police, from the from utilities. And what we want also to add, and we are working on, is to get data from GBC also for global business companies, so that for all these global business, it will help them to facilitate to open an account and all these kind of things. So today we are still in the process for the global business. So it's a journey to have all this, but we started with a minimum so that today we can offer the CKYC to banks. And the idea behind is why for the Bank of Mauritius? Because the Bank of Mauritius is the regulator for banks. So as a regulator for banks, we can go there and audit to ensure that they have the proper consent for their customers. And on the other side, there's also the FSC for all the financial services, for insurances, for example. Insurances, they will go through the FSC to the Bank of Mauritius to collect this data, so that we ensure that there's a regulator who will give access to its regulators, so that we can have this oversight on how the data is being used.
Thank you very much. Was there any challenges in bringing financial institutions on board and encouraging them to integrate with the CKYC?
No, there was no real challenge from financial institutions. In fact, financial institutions were asking for this service. So there were no challenges to have them, to onboard them on the project. But the challenges that we may face is sometimes they will look for some data that may not yet be available on the central registry, or sometimes the format of the data that they want to have is not yet in the format that they are expecting. For example, for addresses, we have some utilities company, they are still using a flat address where you have one line with all the address and it is not split in town, or you don't have this granular address. So there are these kind of challenge that we are also working on to improve the service later on.
Just out of curiosity, how many financial institutions are in the Mauritius market? Do you have a rough number?
No, no. In fact, in the financial institutions under the FSC,
banks.
We have several of them, hundreds of them. Yes, with insurance companies, GVC, and all that. Quite a lot. And under the Bank of Mauritius, we have all banks, non-bank deposit taking, and also payment service providers. They are all regulated from the bank. Roughly, we have today, it is increasing. We have, as at now, we started 2 years back, we have around 50 institutions connected to the CKYC platform.
Great, thank you. And from a financial inclusion perspective, how has the CKYC reduced the costs and complexities of the process for banks and fintechs? And is this felt also to customers, or is it just for the banks and the fintechs?
So I won't be able to say what is the cost saving for the customers or the financial institution, because we did not do this exercise to collect this information. But what was done is to improve the existing service. So through the e-KYC today, the institutions have been able to enhance their digital onboarding, for example, where previously you had to take a photo of your ID card, upload it. So instead of taking a photo of the ID card, the system will go and fetch the real ID card of the customer, the real photo of the customer, and will be able to do a check between this photo and the liveness check, so that we are using data coming from the source of truth and not data being given by the customer. So it improved the operations. It also improved the, regularly institutions have to go through all the KYC of customers to ensure that the data of the customers are up to date. So previously they had to call all these customers to ask them, are you still living at the same place? Did you change this and this? Who are the deceased customers and all that? They have been able to automate this. Today they have some scripts running to get all this data, and they can fetch automatically the information of deceased customers, or if the customer changed its address, so they will have the new address of the customers. So it improved the overall process for the institution, but cannot say what is the gain behind.
Great, thank you very much. So in terms of safeguards in issues such as privacy and security, are there any safeguards that have been put in place so far? And at what stage of the process did you begin to think of these safeguards? So
we thought of the safeguard at the beginning of the implementation. And the two main things was the data protection and the cybersecurity thing. So on the cyber side, the platform is not exposed to the internet. It is the platform is inside an internal network, and only participants through a dedicated network can access to the e-KYC platform. So then participants, they may expose it on their side, but they have to ensure that they have the proper cybersecurity infrastructure on their side before collecting data on the central KYC. So on our side, we limited it to connected to a private network, so that we limit the cyber risk. And then we have also, of course, our all penetration testing and cybersecurity requirements for the internal network, but we avoided exposing the central KYC system. This is one. And the second part is the consent registration, to ensure that when a customer data will be requested from the e-KYC platform, each participant must keep a record of the consent of this customer, so that the request will go with a consent, and this consent is stored at the central bank in the central KYC system. It's stored so that later on we can go and tell an institution, show us the consent that you receive for this specific request. And they must be able to show that they receive properly the consent from this customer before sending requests to the system.
That's very impressive. Thank you very much for sharing. I'd love to hear a little bit more about that. So looking ahead, are there any plans to introduce new use cases, for example, for open banking or open finance using the e-KYC platform?
Yes, there are. We are adding more features, connecting to more data source. For example, one thing that today we don't have access to those who are coming to Mauritius. So foreigners in Mauritius, we don't have access to this database to do the KYC, and we can only request data from Mauritians. So we'll extend it so that also those residents in Mauritius can have access. So those, and also those who have a permit to work in Mauritius, so that we can access this data, so extend this kind of information. And having this kind of information will help them to have access to, for example, to payment service providers, facilitate the access to open bank accounts, and this part will help. What we are also looking at in the third phase is to connect the central KYC to institutions like Nexus or WorldCheck, so that instead of giving only the access to a database, we can also go a bit further in the KYC, giving institutions a first screening of the customers they are requesting.
Great, thank you very much. So I would love to now move over to Seychelles, but one last question for you would be, what are the anticipated challenges and maybe opportunities of scaling a system like this regionally, so across SADC?
I think the main challenge, based on the experience we had, would be the alignment of the legislation in different countries, and how will we handle the consent of the customers to share the data of this customer overseas. I think this would be the main challenge.
Okay, thank you very much for sharing. So I will move over to speak about the SAID, but I would ask you to just stay, because towards the end, I would allow some people to ask a few questions. Thank you again. Ms. Diallo, over to you. So financial inclusion has become a really important discussion when it comes to building different DPI platforms. So when you were thinking about the SAID, what were the important building blocks that you had in mind that were being considered to ensure that it does achieve financial inclusion? If you could walk us through that a little bit. You are also on mute. If you could just unmute.
Thank you for that. Thank you. Yes, when government came up with to build the national digital identity, which was a part of, at that time before 2022, was part of the digital steering economy agenda, which has to identify key platform that we need to build in order to drive a digital economy. So one of the key platform was digital identity. So part of that, the bridge between digital identity and economic integration is SAID provide a verified and government-backed digital identity for financial system. So this eliminates the need for physical identity submission. Part of the SAID ecosystem, we have the virtual ID card, which is verified information from the foundational system of the civil status. Civil status is the system that issue national identity number. So SAID is built on top of that foundational ID system. And also what SAID provide in terms of know your customer is by linking SAID, system ensure that the person initiating a transaction is indeed the person. So this will reduce fraud and as well as increase confidence both for customer and financial institution. We have a few building blocks that DICT came up in order for us to not only for financial inclusion, but for the development of other government system or private system. One, we need to have a robust digital infrastructure. When I talk about robust digital infrastructure, I'm talking about a stable nationwide connectivity layer. And I think Seychelles has worked really hard in deploying government connectivity layers across the islands, and as well as connecting to outside through 3 submarine cables. So this is the first foundation. And as well as you mentioned earlier, the deployment of digital public infrastructure. SAID is one of DPI item. So that's why we had to invest in that. And then we have released it in 2022 because this is the root of trust, the root of identifying identity. The second two layers that Seychelles is now investing, and we have started that last year, is the other two key layers that, like Mauritius has mentioned, was a robust payment layer, which is for us to be able to have a central national government payment system, to introduce a national QR code standard. And the last one layer that will push financial inclusion, will help financial inclusion, is to us to build a data exchange government service bus. I'm very happy to hear from Mauritius they were able to start this process, and Seychelles and DICT as part of it. We have multiple registries, so ensuring seamless data exchange. This as well will push and will help in e-KYC across financial institutions and other government institutions that needs as well e-KYC in order to give services to the customer. As well as another building block that is very important is customer protection and data privacy. In Seychelles, we have launched the Data Protection Act in 2023, so we are a little bit just 3 years ago. And part of this is to have an informed consent. That means it's the consumer that have total control on when to release the data to any entities accessing it. And SAID has that inbuilt consent mechanism. Let's say you access a government services with your SAID. The first thing that they ask, do you consent? Do you grant your data to be shared with this government institution? And then we will apply the same thing for financial system. Another further development that we are currently doing is to provide a clean digital path for then the SAID user to be able to identify or dispute transaction or report identity theft. So this is something that we really need to develop. Another building block that we found is digital literacy. This is very important. So any SAID link service, we need to ensure the citizen, the resident, or permit holder in Seychelles understand what is SAID, understand how SAID is interacting with the financial. So every time we roll out a SAID link government online services, we design an aggressive communication plan. And usually we have a 3-stage approach to that. First, it's an internal awareness within the agency, then it's awareness with the customer, and then we do a pilot phase before we launch. So these are the key building blocks that we have through our experience since 2022, we have put in place, but we have 2 missing DPI layer that will push financial inclusion as well as government system development.
Thank you so much. It's very impressive to see that consent management is both an important aspect for Mauritius and Seychelles. From our work across the continent, that is one request that citizens are asking for, and not a lot of countries have been able to actually embed that from a government perspective. So it's very impressive to see, and I think it's something that countries could learn a little bit more about. So moving ahead with SAID, how do you see it becoming something that supports to reduce barriers when it comes to onboarding or just expanding participation in the formal financial ecosystem?
Okay, so SAID is almost a brand new products in the market or introduced by we launched it in 2022. As of 2026, we do not have currently direct system-to-system integration between financial system and SAID. But however, we have done that with a lot of our government system. And so we want to be able to be ready, and this is what we have done. The SAID platform has been designed to be fully integrated ready. Right now, anyone, private sector, public sector, they can go on the SAID platform. We have the SAID developer portal they can integrate it with the CID platform. So what we wanted is to have a single source of identity authentication. So that is why we have now, with the introduction to government services, citizen does not need to have different logging mechanism to access different. So they have one CID and they can access multiple government services. So we want the same thing for the financial sector. So we have started this conversation this year, and one of the main banking institution has already approached us on how they can integrate with CID in order to facilitate customer onboarding. We will see this interest growing in 2026, because in the 2026 more government services has been integrated with CID, and financial institution will see where they own customer using CID to access government services. So we expecting this growth, and we are, as well as the government, we are approaching financial institution for them to integrate in order to facilitate the customer onboarding, to create accounts or to access the existing banking accounts.
Thank you very much for that. So one of the main things we're seeing, especially with digital IDs, is that sometimes a platform has been created, it's been rolled out, but when it comes to usability and adoption or interoperability, that becomes difficult. So far, I know it's a fairly new system. What are some of the challenges that you have seen on the ground? What do you have any learnings that you can share so far? Yeah.
Yes, any new changes, especially that target citizen, is really, I can say, it's a challenge. It's really a challenge, but government has invested on that. So one of the challenges that we have encountered since 2022 is adoption resistance. Certain citizen or perceive a CID registration as a complicated and compared to the traditional NIN. NIN is the National Identity Number and Passport System. So for us to overcome this perception, we are doing aggressive campaign, awareness campaign to target citizen or to target specific private sector institution, as well as public institution. And based on the feedback that we got for the last 4 years since CID was launched, we are currently, because one aspect of this perception is the onboarding process of CID. So based on the feedback that we got, we are currently redesigning CID registration process to be seamless and more simple, especially if we want to target the other section of the population, such as the elderly. So this is expected to be launched in Q3 of 2026. So this is one challenges that we have seen and that we need to address, both the awareness campaign and making sure the registration process of CID is seamless and simple. The other challenge also that we have faced, especially from our CID support team, that they have advised us, as we are the development team, but they are the one on the field, is smartphone. So this is also, even if Seychelles has a high penetration of smartphone, but we still see that, especially for what we permit holders, that means foreigners in Seychelles that are working in the construction sector. So sometimes they do not have a smartphone, and you need a smartphone for CID. But what we have seen, they adapt. We have seen a few of them share the same smartphone, because CID app, especially the CID app, you can install it, but you can have different account access and with different login credentials. So we have seen that they adapt on how to share smartphones. So this was one challenge, but we don't expect it across the main population, but this is something that we have seen. Also, digital literacy. This is very important. You might introduce the most advanced system, whether the national ID, but if we do not have a digital literacy, or they may struggle with using CID, especially, like I said, the elderly, or disease or section, or social benefit clients, because usually you will see these are the people that we have digital literacy among this section of the population. And what we have seen also, it's trust and awareness. And this is something we at the ICT, we know the system is secure, we trust the system, but it's difficult to translate that to both the population and financial institution. So we need to be able to communicate that the system is secure, and then we need to show, okay, not just saying it's secure, but show that the system is secure. And this is why government has released a circular that all government online services in Seychelles, if they need authentication, they need to use CID. So that's why we will see more and more government services, and this will show private sector, especially financial institutions, that the system is secure. Government are using the system, the digital identity, to do transaction, for customer to do transaction with them. So these are the challenges that we are faced. Hopefully, we are making the mitigation, several mitigation, so that we can overcome these challenges.
Thank you very much. I think you covered quite a bit of my questions, and I really liked the depth that you went when it came to accessibility, especially digital literacy. So what has been the responses for financial institutions? Currently, are they using CID, and what has been their response or their feedback? Is it making onboarding easier? Are there areas that they would want to be either added or removed? Just their general feedback so far.
Okay. I think financial institutions, generally, they are a little bit cautious of anything that is introduced into their landscape. So for the time being, like I mentioned earlier, we do not have any financial institution that has done a system-to-system integration. But what happened in 2025, the Central Bank of Seychelles, because part of CID, we have the virtual ID. This is equivalent to the physical ID card. And what the central bank has to push digital ID in the financial sector is to release a directive to advise financial institutions that the virtual ID card, as part of the CID ecosystem, is valid, and it's an acceptable form of identification from their customers. So this has really helped to push CID in the financial system. So in 2026, right now, what we want now is to go with each financial, especially the major banks, for them to be able to start, has an option. Sometimes you have to not to do push them, make it mandatory, but it's a cooperation, it's a partnership. So what we are trying to do is approach the bank to say, has an option on your banking platform, your web platform, your mobile app, make CID has an option for for your customer to onboard in order to create accounts, because the CID has already verified the identity of the person. Because CID, for you to get CID, we have an e-KYC as part of its process. So, and this e-KYC is against the civil status system, which has the identity of people in Seychelles. So we trying to give them option that they can implement as part of the platform to include a CID in the onboarding process. So this is a conversation that we are, and then this is something with even the vice president. We just had a conversation from my yes, the principal secretary of the ICT that just had a conversation, for us to push this, to have an aggressive campaign with the financial system, financial provider, to let them know this is an option that they can use to give to the customer.
Great, thank you very much. So now I'd like to move over to Mr. Abacha and back to you. Just one question for both of you. What do you think is the key lesson that you would share with another country that's just starting this journey? And especially when they're thinking of cross-border, not just in country, but cross-border verification as well. What would be the one lesson that you would share with them? Ms. Diallo, since your mic is unmuted, we can start with you and then move over to Mr. Abacha. Yeah.
Okay. I have one key lesson, like I would say, really, from our experience of deploying CID is government and political willingness. Without this, it'll be really difficult. It'll be challenging to launch a national digital identity in the country. So we are lucky, the department is lucky that we have this backing. Government has recognized the need, the necessity to have a digital ID. And this brings financial backing because we have that government political willingness. So this is one very important factor that country needs to take in place, that government needs to give that support, that willingness, that financial backing. Also, building citizen trust. This is something that I've seen across. So you need to be sure, you incorporate not just the technical implementation of a national digital ID, but the other soft aspect. That means giving enough awareness, providing campaign, going door to door, going to each major private sector institutions. So this is something that we are considering now, like we're changing our minds and doing one-to-one awareness campaign. Now we need to change it like that so that we can build citizen trust on the national digital identity. So that's why these two aspects, because technical development of national digital ID, this is something that it's available. There's a lot of companies that can help you. But those two factors are very important. And as I mentioned earlier as well, you need to take into account it is a digital identity. So digital literacy aspect also is something that you need to incorporate as part of your campaign, as part of your deployment of a national digital identity. Because without that, this can prove as something that can fail the national digital identity in your system. Also, in regards to regional integration, I have been part, the department has nominated me as well, like to be part of several forums, and one of them is this one. I'm also part of, in 2024 and 2025, I was part of the African Committee of Experts on Digital ID, which was how to see different digital ID across different African countries on how we can interact. So this is, I think it's a very good initiative, and Seychelles welcome these opportunities, and hopefully we will see more development across on this aspect. Thank you.
Thank you so much. Mr. Abacha, over to you.
Thank you. So the one challenge that I think we have to ensure that it is properly implemented when we'll go on the regional integration is the consent management. And yes, of course, we must have the buy-in of all parties locally to implement the system. But also, when it will be shared with all institutions, we must ensure that we have the proper consent registration management in different jurisdictions, because all of us may not have the same way of managing the consent. and it will be important for us to have some kind of alignment in what is required, how will we audit, how will we get access to ensure that the customer data is being shared to this and this party, but also what will be the possibility that the customer will be given to change, to retract, and all these parts sometimes, if it is overseen after implementation, it is quite complex to redo it or to change it when it has already been implemented. Thank you.
Thank you very much. So I heard three very important things: government buy-in, consent management, as well as citizen trust, which I think are all extremely important. So I would like to open up for some questions. Since I'm not on the ground, I think maybe I'll be able to see if there are any hands.
Thanks, Desire. Any questions? I think we have time for about 2 questions. I've got one at the back. Any other questions? Sorry, the online participants have been ignoring you. Please put up your hands if you have any questions. So we have one question in the house here. Desire?
Yes, please. They can go ahead.
Okay. Good morning, everyone. My name is Dr. Boneswa Siwondla from the University of Johannesburg. I'm a researcher in financial literacy, but in particular, I look at the financial mindset development within the household. Thank you very much for the interesting discussion. And definitely these are tools and systems that are good to be in place. The question or comment I have is around, should I say, security? Also, the context of my question is around what we've been seeing a lot happening in communities is a lot of fraud, or should I say identity theft, with having like bank accounts and so forth, and the fraud that is being effected via social media, your WhatsApp, and all of that. So the lived experience is a mother of all lessons or education, if I may say. So a number of individuals that we're trying to say, we're trying to onboard to say, to adopt these digital solutions, don't really trust, because they are the ones that have been scammed. I mean, a number of times where you get an SMS saying that, oh, it's my mom, she's in trouble, she can't text me, please send me money. And obviously you would do that. So I hear this discussion, but I'm trying to see where is the bridge that takes into consideration that fact of fear and trust and skepticism around anything that is digital in nature. Thank you.
Thank you. Desire, I'm not sure how you will deal with that question.
Thank you very much. We can start with that question. Maybe I will let both my panelists speak to. So what I understood is, how are we dealing with fraud and identity theft, especially in the digital space? And on this one, I think we will focus a little bit more in how these digital IDs are now being connected to financial services. How are we ensuring that the end users and the citizens are safe? So Mr. Basha, I'll start with you from the Mauritius perspective, and then Ms. Diallo, you can also share with us. Thank you for your question.
So thank you for the question. Yes, it is a challenge that I think all of us are facing, because it is all fraud and scammers and all, they are very active. So the first thing that is being done to tackle it is the digital literacy part, where we have to educate the whole person to ensure that they are not sharing their personal identification number, the PIN, the ID, the one-time password that they are receiving. Today we have some cases where following a WhatsApp message or a scam on Facebook, they will give just everything. So they can give the card number, the CVV, just everything they will be given. And then the fraud happened, and banks behind will say that you did not protect your own data. So the digital literacy is very important behind. But also we don't stop only on the digital literacy part, because when we look at how scammers are working today, they are very smart. They are very smart, and they come with things that are very specific, and they can trick many of us. So we also try to enhance the security via for example, the e-KYC, so that instead of using a photo of someone a photo that is being given, so that the scammer will not be able to upload the identity of someone, but the real photo will be fetched from the source of truth, and there will be a facial recognition to match the two, so that if the one doing the transaction is not the one from the proper photo of the ID, then the transaction may be rejected. These are things on what we are working to improve the security. Thank you.
Thank you. From Seychelles, I totally agree with my Mauritius counterpart. Digital literacy, especially, like I said, on a few segment of the population, the elderly. And I have seen an increase by I'm not in the financial sector, but as a customer, I have seen an increase in awareness by the banking sector. Like they will be pushing in emails, in SMS to advise their clients of how to not to disclose the information, because of banking sector will not ask you through the phone, either SMS, WhatsApp, Facebook, for your digital, for your banking information. So I have seen an increase in that. And even last year, if I'm not mistaken, with the partnership between Central Bank of Seychelles, DICT, and the banks, they went and did a session at the elderly home to give them awareness around the banking information, on what they need to do, what they not need to do. They even show them different type of scam that can happen. So I think this is most important something. But then the second thing, like it's security on your platform. So for CID, first, for you to get it, to obtain a CID, yes, we have the basic registration, but we have e-KYC. And for you to get your CID, it does do a comparison with the video. It's not, you have to upload a photo. It's not. And then you have to against the civil status, so we know you are the one obtaining your CID, not someone else on your behalf. I have seen that some people say, can I register the CID for my mom, we have to let them know, yes, you can do the first part to help them, but the second part, they have to be there, because they have to have the camera, and then the system is checking a live feed of the likeness against the likeness in the civil status. Also, we do protect your access to your CID. We have the CID app, and we have multi-factor authentication integrated with it. So first is your password, followed by your PIN, and then if it detects your smartphone has biometric functionality, it will let you know to activate that, so that people cannot get access to your CID app. That means your CID, your digital ID. So also, what we have also part of the CID security is we have several. We have the PKC, which is proof key for for code exchange. That means exchange between the platforms. Someone cannot intercept it, like man in the middle attack. TLC integrated, and then it's based on the PKI infrastructure. But I know all this, yes, digital literacy in combination on securing the platforms and making sure like the person accessing their CID are the one. That's why we emphasize to have a multi-factor authentication. Another one also is the consent. So we are building offline consent in case like if a third-party system are accessing your CID, they have a notification that pops up in their mobile on the CID app to say this institution is accessing your CID profile for this reason. Do you grant approval to share? So we have to give full control to them and as well build security around the system, which I'll just share a few of them. Thank you.
Thank you very much. I hope that answers your question. So the not so good news is that when it comes to fraud, they're also learning, and thanks to AI and similar platforms, fraud is also evolving. They're learning the new systems we're putting in place and figuring out how to go around it. But as both the panelists say, there's some incredible ways that both the government and private sector are trying to make sure the systems are secure. So your verifiable credentials, so biometrics, eyes, and so on are in place. I love that the government are taking a front row now in building consent management. So there is an equal part play, but I think as both of them put it, literacy is a huge part in trying to maintain that, especially fraud when it comes to identification is slowly being eliminated. I don't know if we have any other question, Brandon?
Desire, that's it. We've run out of time, unfortunately. So I think we will stop it there. Thank you very much to you and your panel. Please, can we give them a round? Very, very insightful, interesting discussion, which again, as Rado said in the last session, this is also part of a SADC-wide project that we are implementing. It's a CCBG project, implementing with the support of Co-Develop. I'm sure many of you would have interacted with the country workshops that have been held as part of, I think the next one is in Zambia, as part of this process. So it's an ongoing process to establish an e-KYC system for the region. A very ambitious project, but potentially very impactful in the region. So Desire, thank you very much, and your panel. Hopefully we'll see you in person next time.
Thank you very much, Brandon. Thank you, Ms. Diallo and Mr. Basha. Have a good afternoon.
Thank you. Good afternoon.
It's always good when you have best practice within the region, that we're learning from each other's best practice instead of going outside somewhere. So thank you very much for that. It's now tea time. Sorry, firstly, apologies to the French and Portuguese speakers. There was a problem with the translation for this session, and I think it's the virtual session. So apologies for that. I hope you heard some snippets of what they were talking about. Rado?
Thanks, Brendan. We'll make sure that the key learnings coming from this session will be correctly captured in the report. We sincerely apologize for our colleagues from Angola, DRC, and Mozambique. We experienced some challenges with the interpretation. The audio coming from the virtual speakers, but please be reassured, we will capture all the critical issues in the Portuguese version, but also in the French version of the report of this forum. Thank you so much.
Okay, so you won't be left behind. There's someone lost a phone from Namibia. There's a phone that somebody lost yesterday, today, I'm not sure. It's you come and fetch it. It's here with me. Make sure you have your money ready with you and you come and fetch it. So we're going to have tea now, but we're also going to take a picture quickly. So as we go out, Rado, can you I don't know where the picture will be set up. Mike, who's Okay, but colleagues, we're running short of time now. So can we be back here after tea at 10 past 11? 10 past 11. Thank you, colleagues. Colleagues, can we settle down? Tell him to calm down. That's Bobby's default. Okay, colleagues, the next session is on financial health. I'm sure you have picked up over the last few years that the concept of financial health is becoming more and more visible. And so we thought it's a good idea for us to get to grips with what this concept is and how does it apply to our work. And whether it's, I guess whether it adds value to the work that we do. So I'm going to hand over to Bobby. Bobby is, what are you again, Bobby? Senior Analytics Specialist at Funmart Trust. I should have known. So Bobby will take the session to lunch. Yeah, Bobby, over to you.
Thank you. Thank you very much, Brendan. And yeah, it's a pleasure to be taking you through to lunch. I'm glad we've just had the tea. So financial health is part of the 2023 to 2028 strategy, the SADC Financial Strategy for resilient, sustainable, and economic well-being. Those are all concepts that fall under financial health. So what we're now looking at is how we measure whether the goal of resilient, sustainable, economic well-being is achieved at the household and business level. The review that's part of the 2023 to 2028 strategy concluded that access gains across the region have not translated into positive developmental outcomes. So obviously this is a 10-year celebration where we are looking at all the gains that have been made when it comes to financial access and usage and institutional and ecosystem building that you've all done in your countries and across the region, as well as the systems that we're taking forward. But what we now are asking is if the gains across the region in access and usage have not translated into positive developmental outcomes, what is it that we need to measure to know whether they do? The only reason why we have the strategy is to support the financial inclusion strategy is to support the other developmental strategies like RSIDP and Vision 2050. So every member state with the National Financial Inclusion Strategy faces the same gap. The questions that you are in your groups are going to name today will contribute to the regional measurement framework that each of the member states can draw on. And over here, what we're just showing is On the left-hand side, it's the kind of things that we have been measuring and the kind of gains that we've been looking at in the forum so far. In terms of what the financial inclusion data that we have been collecting shows and what it doesn't show. So we can see rising account ownership across income groups. We see very impressive strides in mobile money reach and uptake. We see service usage rates and product uptake and the regulatory frameworks and the quality standards and progress towards national targets. We've seen these significant improvements. But what we don't see is things about the people that we're actually designing, we're making these changes to show improvements for. We don't know how often people face financial distress. We don't know whether their assets are depleted during shocks. We don't know if they can plan ahead and build buffers to be resilient. We don't know if people are becoming better equipped to deal with their financial situations. And we don't know whether usage translates into better outcomes. So the inclusion data tells us about the systems and populations that the member states are responsible for, but it doesn't tell us about the individual people. And when researchers started to look at developmental outcomes in people, they asked different questions and they found unexpected things, which we will get to. I think what's first useful to know is where financial health fits into the trajectory of financial inclusion. So this describes, I think, what we as member states are all doing and what you've all been covering in the forum. So about 40 to 50 years ago, there was a microfinance revolution, which was very much about extending credit for people to build capital for their livelihoods. Then in the last 20 or 30 years, there was a shift into a focus on the ecosystems, which I think is what the member states are familiar with and are particularly active on. Those are formal systems and infrastructure and regulation. And then we also are moving into the digitization. So, mobile money, global data, usage measurement and standardized reporting. And each of these areas has solved a real problem. Microfinance opened access to capital for people with no collateral. The ecosystem era built the rails: accounts, regulation, consumer protection, financial education. The infrastructure there includes payments interoperability, credit information, risk-sharing systems, credit support mechanisms, such as guarantees and movable asset registries, and structured dispute resolution. These are all things you're familiar with and all things that you are focused on in your institutions. The digital era made scale and comparison possible, and it introduced systematic measurement. So this is where Findex comes into play on the demand side, and the Financial Access Survey, the IMF FAS on the supply side, and looking at access, usage, and quality. It comes into this era where we're tracking demand and supply side data. And of course, everybody here, this is where we all come from. This is what our careers are about. But what we're now looking at with financial health is to say, those are critical things for advancing financial inclusion, but what does it mean for developmental outcomes, which is really why we are doing financial inclusion. This is similar to the 2 slides ago, where there are different ways of looking at money and people. So on the left-hand side is financial inclusion thinking on inputs and outputs, which is what we're all familiar with. So what products are available in the market? How many accounts have been opened? How many loans have been dispersed? How many agents and touch points are available in a country or in a region? To what extent do people use those accounts and services? Are they mailbox users or are they active users of those access points? What is the level of over-indebtedness? How many accounts or services do people actively use? What is the compliance of the institutions that provide those services or could provide those services? That's all input-output financial inclusion thinking. And then on the other side, when we think about impact on people's lives, that's about outcomes. So are people managing day to day? Can they handle unexpected costs? Are they working towards goals? Do they feel in control? Are they financially better off? So the shift over here is measuring what we deliver, which we're all familiar with, to measuring whether people are financially better equipped to be able to manage their lives. So I think it's really important, though, that it's not so simple. It's not as simple as financial inclusion means people will better manage their lives. The really important thing is, how is it possible that financial inclusion could help people manage their lives? And so we really need to think over here that financial health is shaped by factors beyond financial services. So what is your level of income? What is your actual medical health situation like? What are your economic conditions? All those kinds of things matter. It's not that, and we know this, we know that financial services are not enough. It's all the other factors that are present in the country and that other parts of our government, that we coordinate with other parts of government and the private sector to put into place. The other thing is that financial inclusion can also lower financial health. So if a loan can't be repaid and it's used for non-productive purposes, the person who took the loan is going to be in worse condition than before they took the loan. And on the left-hand side, in terms of inputs and outputs, that person is going to be counted as a loan dispersed, but it doesn't ask what the loan did to the person. It just counts that they got the loan. So what we've seen over here, and this is just a sort of high level, looking at some recent FinScope consumer surveys, what is the level of formal financial inclusion and what percentage of adults are financially healthy? So South Africa in 2023 has 98% formal financial inclusion, 24% of adults are financially healthy. Lesotho in 2021, 87% financial inclusion, 18% of the adults are financially healthy. Mozambique in 2022, Zimbabwe in 2022, 83% formal financial inclusion, 9% of adults are financially healthy. Mozambique in 2019, 43% financial inclusion, 5% of adults who are financially healthy. So yeah, how is it possible? Well, this is what this session is about, to actually sort of understand how it is possible and how we should start to think about the link between financial services and financial health development outcomes. All right, I think it's sort of useful at a very high level to sort of know what some of these different concepts that get spoken about, what they are and how they fit together. So financial literacy is basically what someone knows. We're going to come at a simple level. Financial literacy is what you know. Financial capability is what you do. And financial health is about your ability to manage your financial affairs. It's really just looking at these sort of concepts. They're not interchangeable, and there's sort of a foundational flow in this way. So we're not going to be asking you about literacy or capability. We're going to be asked about, when you work in your groups, you're not going to be looking at literacy or capability. You're going to be looking about financial health outcomes. You're going to be looking at, what does this tell us about whether someone can manage their financial affairs? That's the group work, is really that last one. Not literacy, not capability, ability to manage financial affairs. In the financial health framework, there are 4 different dimensions. We don't have much time, and it's sort of an introductory session. So we are only looking at 3 of those dimensions. There is the day-to-day management, and that looks at if people can cover their expenses, if they can pay on time, if they can end the month without borrowing for food, how well they manage day-to-day. And those link quite closely, quite well to SDGs 1 and 10. which we sort of break down a little bit. And then there's also handling shocks, and that is if people can absorb an unexpected cost without selling assets or falling into debt. They can sort of weather different bigger financial shocks. That also links to SDG 1 as well as SDG 13. And then we have progress towards goals. Are people building towards education, health, housing, or a productive asset base? And that links to specific SDGs around goals, SDGs 4, 3, and 11. And then there's financial confidence, but we're not going to look at that in this exercise today. The dimensions, they come from international frameworks, including from the G20, GPFI, and the Financial Health Network. They are a starting point. They're not the answer. They're only the beginning of considering like these linked to developmental outcomes. They do not provide the answer. So today is actually, as a region, as member states within a region, is to start saying, well, what's missing from the framework? What's also missing from what we're currently doing at country and regional level? What needs to be adapted? What questions are actually going to be useful to your regional and individual country context? That's what the focus of today's activity is about. That are common, that are sort of associated with these dimensions. So day-to-day management. Does your income cover everyday expenses? Do you pay your bills on time? Is cash available at the end of the month? Are you not borrowing to cover food or transport? Those are the kind of indicators for debt. For handling shocks, it's things like, do you have a savings buffer equivalent to 1 to 3 months of expenses? Do you have insurance or reliable risk cover? It could also be informal insurance if it's reliable risk cover to handle a shock. Have you not had to sell any productive assets to cover an emergency in the past year? Those are all things about being resilient to shocks. And then progress towards goals. Do you regularly save for a specific goal like education, health, or housing? Do you have a financial plan that you make contributions to on a regular basis? Do you have savings that is sustained? It's not something that you are depleting, so that you're able to sort of continue on that pathway towards your goal. And these indicators are illustrative. When you're in your groups, you're going to be asked whether these questions fit your context and what is missing. Most of these sub-dimensions, again, just like financial health overall, most of these sub-dimensions are shaped by many factors beyond the level of financial inclusion. So income, employment, geography, social networks all play a role in being able to achieve these goals or to achieve any of these dimensions. It's not financial services alone, but it's important to see, well, what is the right way to think about where financial services fit in, and also what kind of question, given these other factors, or what kind of questions you want to explore to appropriately find that link. Anyway, these other things are worth measuring: income, employment, geography, social networks, because they show where financial services can make a difference and where other interventions are needed, where you would need to coordinate and collaborate with other partners in government and outside government. So those are, these 4 dimensions are framed at the moment: day-to-day management, handling of shocks, progress towards goals, confidence. They are framed for the consumer side, side for MSME. So the equivalent day-to-day management for MSMEs is managers. Can the business operationally sustain itself from its own cash flow? For handling of shocks, it's capital. Does the business have access to assets it can use without destroying itself? For progress towards goals, it's about growth. Is the business generating surplus it can reinvest? And then also for confidence, it's about planning. Does the business have the ability to handle changing business cycles? And I think for SADC contexts, in most households that are running small businesses, household and business finances are often mixed together. They're not cleanly separated. So if you just assume that the framework has a simple distinction between household and business finances, you're going to miss most of the MSMEs. So it's important to sort of see both sides of an MSME. All right, so the task today for your country's context and the segment that you have is what questions under each dimension would tell you whether financial inclusion is contributing to the outcomes that matter. It says each group records 1 to 2 questions per dimension. We'll, as part of the briefing, we'll find ways for you to focus in on a particular activity. We also have helped with the briefing to link the questions to the sustainable development goals that are listed for each dimension. And the key question, so this is really the focus of the activity. What would we need to measure to know whether this particular sustainable development goal outcomes are improving? But the facilitator will brief you on the worksheet and timing. Now, there are groups 1, 2, and 3. The way to find it is if you go to this lanyard and you look in the top right-hand corner, it will show you, that number will tell you which group you are in. So group 1 is going to be here. This is an English consumer group. Group 2 is going to be with OBIT. That is an English MSME group. And then group 3 is a consumer group that has delegates from DRC, Angola, and Portugal. Sorry, and Mozambique. My mistake. Portuguese speakers are going to be in group 3 with Hamilton from the SADC Secretariat. And we will give you, you will get 2 documents as soon as you enter your venue. Your facilitator will give you 2 documents and you will work on, and they'll brief you on the activity. And then one of the first things is also going to be about assigning a person to report back to the group. I'm going to hand it over to Mike now.
Thanks, Bobby. I just want to mention that the virtual people will stay in this room, this current room. And there's some individuals that never got a name tag or hasn't been assigned a room. So if that's the case, I'm just going to share my...
We can delegate, yeah. We can
share the screen quick. But you can choose either stay here or go to group 2, or group 3 is French and Portuguese. Yeah, thanks.
Oh, all right. Thank you. So the group 1 is going to stay here. Group 2 is going to go to conference room A with OBIT. Group 2 is the MSME English group. Yeah, OBIT will come through and he'll lead you. He's holding his hand up. He's going to stand. All right. And then group 3 is going to go with Hamilton, who is standing behind over there. He's going to go to conference room C. That's DRC, Mozambique, and Angola with Hamilton.
That's group 3.
Hamilton is group 3. DRC, Mozambique, Angola, you can go with Hamilton. Group 2, MSME, you can go with OBIT. Yeah. And group 1 will stay here.
Probably can start with climate action.
Okay, the virtual group. Please ignore me, everybody else. I'm talking to the virtual group. All right. For the virtual group, thank you for doing this online, and I think you can participate virtually. Michael has shared the reference document as well as the worksheet. So the reference document is the one that's got the images in it, the SDG images. And the way that it works is that it sort of will talk about which SDGs are linked to that dimension. Online group, take dimension 3, which is about goals, about pursuing financial goals. So work on that one. And what you'll do is you'll decide if there's a particular goal or if you want to cover a few different goals, the SDGs that link to it. And then if you look at your worksheet, go to the page that's got dimension 3 on the goals. I've got it up here on my laptop. All right, so I'm going to project on my screen. I'll share my screen so I can show you the worksheet and talk to it directly. So if you look here at dimension 3, progress towards goals, are people building toward education, health, housing, or a productive asset base? This links to SDG 4, education, SDG 3, health investment, SDG housing, and SDG 1, sustained poverty exit, let's say improved livelihoods. And what we've given you here is an example to guide the discussion. So among adults with a savings product who report their balance growing toward a named goal over the past 12 months. This could be any of these goals, education, health, housing, improved livelihood, versus those who depleted their savings to cover immediate needs. So that's just how many people with a savings product had a growing balance versus a depleted balance because of covering immediate needs. And then the next question is why it matters in our context. It distinguishes between building a savings account, which is access, and actually building towards something, which is the outcome. And then the follow-up questions, what change would confirm improvement and what currently stops us? So I think as a group online, if you can discuss if a measurement or a question that you'd like to, that covers progress towards goals, a single one, something that could do it and why it matters, and then covering the other questions, the other column dimensions. I don't know if there are any questions, or you could always sort of put your hand up in the chat and I can have a look to see, but I think, yeah, that's just the exercise that the other groups are doing in person over here, and the virtual participants can do amongst yourselves. Keneilwe, I see you have your hand up. I don't. Let me just. Welcome back, everyone. I hope you had a good lunch. Before we get the report back on the groups for financial health, just one announcement to make before you leave. So let's say once these sessions finish, anyone who hasn't signed the attendance register for day 2, please go and make sure you sign it at the front at the entrance. It's going to be part of the report for the SADC FI Forum that obviously will mention about member state attendance. So it's really important that you make sure, if you haven't signed in today, that you sign in before you leave, just at the front. Thank you. All right. We're going to start the report back. I'm going to first ask the spokesperson from Group 3 to provide report back. Thank you.
You need to sit down. You need to sit down and speak.
Right. Good afternoon, everyone. I will talk in Portuguese, please. Bom, boa tarde a todos. Nós somos do grupo 3 e vamos falar sobre os consumidores. O grupo 3 é composto por 3 países: Moçambique, Angola e DRC. Os membros estão na sala e nós vamos agora passar a olhar para cada dimensão. Não? Já? Passar a olhar para cada dimensão. O grupo 3 constituiu a cada dimensão uma pergunta que entendeu ser pertinente e para a primeira sobre a gestão cotidiana. Para a pergunta, nós temos: entre as mulheres no setor informal com conta mobile money, quantas conseguem criar reserva para suportar as suas despesas familiares mensais? Com relação à importância deste no nosso contexto, colocamos que esta questão distingue a poupança e a despesa corrente. Com relação à mudança que confirmaria uma melhoria, nós colocamos a capacidade de gestão destas mulheres. O que hoje impede? A ausência de capacidade de gestão, ausência de literacia financeira e digital. Passando agora para a segunda dimensão. Com relação à absorção de choques, temos cá uma pergunta que é: entre as mulheres no setor informal, ainda dentro do setor informal, com conta mobile money, quantas estariam em condições de responder a choques por até 3 meses? Colocamos que, com relação à importância no nosso contexto, esta questão mede se as mulheres no setor informal absorvem o choque sem consequências duradouras. Com relação à confirmação do que seria a melhoria hoje, microseguros e poupanças, se elas pudessem aderir. O que impede atualmente? Falta de capacidade, falta de literacia financeira. Com relação à progressão em direção aos objetivos, que é a dimensão 3, temos como pergunta: entre as famílias com 5 agregados familiares que vivem com salário mínimo, quantas conseguem ter uma habitação condigna? Com relação ao que é importante no nosso contexto, esta pergunta é importante porque distingue porque assegura a estabilidade. Esta pergunta é importante porque assegura a estabilidade social destas famílias. A mudança que confirmaria uma melhoria é a implantação de políticas públicas de habitação social para pessoas de renda mínima. O que impede atualmente? Atualmente impede porque há ausência de políticas públicas inclusivas. Para o grupo 3, nós identificamos estas 3 questões ou perguntas para cada uma das dimensões. Muito obrigada.
Thank you very much, Group 3. That's very interesting, and also to hear across the different contexts. I'm going to move to the consumer group in English. We have 2 people that are, we've split it into 2. Let's call this side to the spokesperson from this side to start.
Am I audible?
Yes, I think we can hear you. Please continue.
Sure. Was dimension 1. So the question on our end was what percentage of account holders have access to digital services, right? Why it matters. We were looking at just mere access versus meaningful economic participation, because access to digital services allows one to have better resource or efficient resource allocation. And the example we gave is that currently those without digital access points sometimes would have to use cash to access a digital access point outside of their community, which means that money, when they have digital access points, they can now allocate it better, buy food, instead of using money for transport to go access the cash they have in their bank account. So it was for that reason. What is currently stopping this is lack of infrastructure, such as connectivity, lack of trust, awareness, and education and financial education costs. And then an additional question that was added was percentage of those with productive credit, productive being the operative word, are able to repay their debt obligations on time and without using another form of credit to repay that debt. Why that matters is because of high indebtedness, better debt management. What would confirm the change? Declining credit balance, improved credit scores, better debt management. And then what's currently stopping us? Inadequate legal and regulatory frameworks. Rising costs, including interest rates and inflation. Ooh, what is this? Oh, okay. Infrequent or unstable income. I was audible for that thing. Yes, thank you. Not sure if we answered the question.
Oh, thank you very much. Well done. All right, let's have the other group on this side from the English consumer to report back. Thank you.
Good afternoon, everyone. It's I'm going to talk about dimension 2, handle shocks. The question is, among adults who faced an unexpected cost equivalent to 1 month income in the past year, what share absorbed it without selling assets, withdrawing long-term savings, or taking on debt they cannot repay? Our discussion will focus more on the SDG 13, that is climate and disaster. As you're aware, floods and cyclones are common in the SADC region, and most economies are rural-based economies, and the impact of climate change on a daily basis can be felt among the citizens as well as the community in general. During floods and cyclones, people lose their homes, lose assets, and very often the solution is to borrow from family members, so debt within the family, if those family members are not affected by the climate change, by the disaster. If the family members are affected, they sell the remaining assets, and this creates financial instability within the community and also within the family. There have been, member states have spoken about their experiences. For instance, why does it matter in our context? Like when there are such disasters in member states, for instance, in Malawi, government comes in to rescue the community, and there's a special department for disaster management, which pull in the fund from government as well as from the private sector. Then these resources are used to help people affected by the disaster in terms of priority issues, that is food, clothing, and temporary shelters. Unfortunately, financial inclusion, namely savings in banks, are not very well versed in some of the countries, especially in rural areas. And when these disasters occur, livestock also are affected and people are not able to sustain. For the case of Mauritius, we took the example of a cyclone which occurred 2 years ago, and then government and the regulator chipped in the money, because in Mauritius there is a mandatory insurance cover for cars. During that cyclone, many vehicles were destroyed, were damaged, but unfortunately the insurance covers at that time didn't cover for floods, most of the insurance covers. So then for the remaining damage, then the government and the regulator provided the funds to cover the damage on the cars. But in many member states, we've noticed that, for instance, in Botswana, in Lesotho, there is no mandatory insurance cover on vehicles, even not third-party insurance cover, and this is an issue. We also have the case of Eswatini, where there is very low insurance uptake by businesses, and financial literacy is also very low. So what change would confirm improvement? It starts firstly with financial literacy. Citizens have to be financially literate, to be financially healthy, and financially also capable of taking up insurance products or other types of financial products. And government needs to put up measures to absorb shocks, as countries are at different levels of insurance uptakes. So the economic condition would drive the amount of insurance uptake that a country can consume. What currently stops us from this improvement is the economic capacity that drives low insurance uptake. So normally in most member states, food, shelter, clothing, all these are priority matters. and insurance uptake is secondary. So it should start like in at schools itself. There should be like more financial literacy programs to make people aware about insurance product. But then the question remains about whether the people would be able to pay for the premiums, because year by year the premiums also are going high, especially if the asset value is high. So this economic capacity is a real issue, a tangible issue. Also, the universal, in Tanzania, we've noted that there is a universal insurance covered by the government. And also in Malawi, there is sovereign insurance, which covers disasters such as droughts. So this could be a way to a solution to those problems. So if I've missed anything, the team can chip in. Thank you so much.
Thank you very much. That was very interesting and very interesting to hear across different contexts. I know there are some groups from the MSME to report back, which I think there might be 3 groups. Which group will be reporting first from the MSME? Okay, thank you.
All right. So I will be reporting on the management of SMEs. And the key question here is, can the business meet its day-to-day obligations from its own cash flow? Our SDG anchors, are SDG 1, no poverty, and SDG 8, relating to decent work and income stability. So our team posed various questions. So the first one was a question around the extent of reliance on household income to cover business operations. And this obviously acknowledges how for small businesses, or rather SMMEs, they tend to relate or rather be interconnected with household income. We also posed the question around the dependence on external debt and the extent of that. And another question was around, do you financially manage your own business as a business owner? Why this matters in our context. So we thought about how the improvement or the scalability of SMMEs could address the high unemployment rate. Also accounting for the workforce as a whole. So SMMEs contribute significantly in its current form to economic growth for SADC countries, and also just the sustainability and scalability of these businesses is important for us to attain economic growth. The change that would potentially confirm improvement, it is suggested that there would be a split between household income and business expenses, and that these two would not merge in the ways that they currently do. There would also be a shift in the survival rate of these businesses, so how long they're able to stay in businesses, but also accounting for the nuance that businesses do close for various reasons. But here specifically, I believe the team was speaking about entrepreneurs that still want to remain in business and operate, and they're able to survive despite economic shocks. And also it is suggested that a change that could indicate improvement is how businesses can move from micro to small or medium across both the informal and formal sector. And here are the challenges around what's currently stopping us. Tracking tools on MSME health across the region, a lack of trust when it comes to interventions within the specific sector. And then it's also suggested that the lack of regional financing institutions might contribute to us not being able to have a deeper understanding of the financial health of SMEs. Thank you.
Thank you very much. Which is the next group from the MSME? All right, thank you. Please go.
Thank you. Our dimension was on capital, and the question was, does the business have access to assets that allow it to absorb disruption without destroying itself? And what this includes would be savings, assets, credit access, or insurance that allows it to absorb a demand shock. And the context note is the household assets, land, livestock, and savings often serve as the business buffer and vice versa. So the questions around capital should consider what is available across both sides from the household business boundary. And we're anchoring on SDG 1, no poverty, 3, good health, 13, climate action, and 10, reduced inequalities. So what the question we found important was, does the business have the capacity to succeed and or exist without the owner in the context of business continuity? And does it have financial buffers to survive and recover from shocks without loss of productive capacity? And this is in the context of access to savings, insurance, emergency liquidity, and risk sharing mechanisms that is more meaningful than just access to finance. And the next question was what we found the hardest to answer with the current data, or the gaps that we identified, was that the current data is not qualitative, in that it's not giving insights that are required to assess whether the business is financially healthy. And lastly, the context that we feel were not captured by these dimensions was that in some instances we would need to segment the questions based on the size of the business, as some of the questions would be contextual to the specific size of that business. If I missed anything, my team will add on. Thank you.
Thank you very much. And then the last group from MSME, who is the spokesperson? All right, thank you very much. Please go for it.
Good afternoon. My name is Siziwe. So we looked at growth of a MSME, and the most important question that we found is the entrepreneur and the business separate juristic persons? We look at that because as businesses grow, the same person that is doing the bookkeeping is also the same person that is looking after their own personal budget. And that's the context of why this particular question exists. The difficulty to identify between profit and money that can be utilized for your own benefit is where the growth element starts impacting on a business. Things that would help us see improvement within this particular context is digital and financial literacy. Once we see that within each business, we will see improvement. This also includes business skills, the ability to reinvest, business expansion, them growing from MSMEs or from small to medium or from micro to small, seeing that difference within each different year. The ability for decent work for the employees and the entrepreneur, him or herself, better pay and the benefits that come with it. And I think in terms of this, what we have here is the ability to handle shock as per what was discussed earlier. Now, what is currently not being done to, or what currently stops us from doing this is that, and I think it also speaks to what we don't have as a dimension. We have it as an anchor, but not sitting on its own. It's education. Small businesses throughout SADC require a lot of education because we see that they often start businesses so that they can survive, survivalist businesses. So once they are educated to how they can transition from survivalists to actual being entrepreneurs, we will see better growth. And lastly, we said it's budget. In terms of the question that we could not be able to answer, I think here we look at is there progress towards the goals of the business? Like we spoke, most MSMEs that we have, they come from survivalists, and those are even entrepreneurs at times fail to show where their goals are or if they can diversify. So those would be the questions that we could not answer. Thank you.
All right, thank you to everyone. I think this is interesting because what I could see coming out of these groups was very much a focus on where does this link to the sort of financial services and the kinds of things that we are looking for. So a lot of the things that we could hear coming up were ideas on financial literacy and digital literacy, which have been coming through the forum over the last couple of days, as well as sort of what are the what are the go-to products, particularly when we're looking at things like shocks, like insurance and suitable insurance. And I think it was very interesting to hear from one of the English consumer groups, which spoke about what happened in Malawi and Mauritius when there were flood events and what the response was like. So what was common over there was Mauritius might have a much higher level of formal financial inclusion than Malawi. But in both cases, there wasn't that kind of climate disaster coverage on the individual side. So the response in both cases is that government, through disaster management or whatever, needs to mobilize funds, but it's insufficient. And so there needs to be private sector and often nonprofits coming through as well. And I think, what's really interesting is that we can see as a region, financial inclusion proponents in a region, the kinds of things that we focus on and what our programming and interventions have been about. But the populations often, or large parts of our populations, are not yet ready for, let's say, have the insufficient income as it come through, insufficient levels of development to sustain the kinds of solutions that are typically seen as necessary. What I think we can see from this session is that when we're actually looking at outcomes and well-being of individuals, it's not a direct one-to-one mapping on financial inclusion. So I think it's quite a challenging exercise to have just thrust on all of you, because we are in the mindset of what are the systems we need to put in place to advance financial inclusion? How do we get better digital wiring going on in our countries and across our countries throughout our region? And so when I then sort of come to you and pose the thing, okay, well, what are the outcomes? If we are seeing managing day to day and resilience to shocks and being able to invest in long-term financial goals, what are the outcomes? What kind of measure is actually going to show us a change in people's lives at an outcome level at an individual person's change in their lives? You can see it kind of breaks down. It's not such an easy exercise for all the work that all of us are doing to say, we have the solution, we already have the measurements, we already have the thinking in terms of what's going to work. And so that's when we can hear some of the things that are coming on. Well, actually, there's literacy that needs to happen. There's literacy that's appropriate to entrepreneurship. There's education that sort of is supportive of that as well. All kinds of other things that, and then of course, when it comes to economic development and let's say levels of income to sustain those types of products, where is that going to come from? So I think what's useful to sort of take from this exercise is that this kind of comes in from the left field. Ultimately, we're doing financial inclusion for economic development and to improve the lives of our people. But it's not as directly linked. It's not that, like, if you give people a bank account, they necessarily are going to have the kind of insurance that is going to cover them in climate events. So, what else needs to be there? What are all the different sort of barriers to actually sort of reaching those welfare goals? And then, what would be the most appropriate measurements? So I think that this is a challenging exercise, and it shows that when we're actually looking at the link to economic development and well-being, there is more thinking for us to do, I think, in our own context, and then also in terms of what's appropriate for the region. I think that there are some good commonalities that have come through across the different contexts, but there's obviously, it's not the kind of thing in 1 hour's facilitation work that all of a sudden we're going to come to it. So I think this is definitely harder thinking, and let's say more challenging thinking to carry on with. Thank you for working with us on quite a challenging exercise. I think I look forward to us taking it forward over time. We're going to stop this session here and move on to the next. We're going actually into the last session for the day. I'm not going to stop if that's the case. What I'm going to do is I'm going to move to the other presentation, and I will share my screen now.
We're moving to session 5 now. Same facilitator, different topic.
So, see if this comes up. Okay. Oh, Todd, could you come up? You can come up as well. Yeah. See if this. Okay. All right. So this session is about a financial inclusion capacity building program, which is building SADC's capacity for responsible inclusive financial systems. And the way that we're looking at this is that financial inclusion across Africa and throughout SADC faces evolving challenges. So while 23% remain excluded and MSMEs lack access to finance, even where access has expanded, meaningful financial health remains elusive, as we've sort of just looked at. Professionals need the capacity to address today's challenges and lead tomorrow's solutions. So what we are looking at is a learning to implementation continuum. We're looking to launch Africa and SADC's first end-to-end capacity building program, where we go from foundational learning to use case development to post-learning support. And the reason why it matters is that training is not enough to make these kinds of impacts. It's all about actually implementation. As you will all know, leading the kinds of complex technical implementation that you do. So we're looking at learning tracks that are individual to appropriate use cases you can implement, building capacity to lead financial innovation in any context, a network of peers across SADC and the rest of Africa, and having your impact tracked over a longer period of time. It's not about just doing coursework, it's about building for impact. And what we're looking at is different types of institutions, central banks and regulators, government ministries, FSPs, fintechs, development agencies, and these are some of the topics we're looking at. So there's DPI, climate risk finance, MSME access to finance, financial inclusion data in a digitalized world, financial health, DFS and digital currencies, and consumer financial protection, amongst many others. It's very much what is relevant to individual institutions. I'm going to, and there's three different phases that we look at. So the first is foundational learning, which is online, and then there's an intensive 1 week in person, and then there's ongoing peer learning and support. I'm going to introduce Todd from Digital Frontiers, who's the expert on the foundational learning aspect. Over to you, Todd.
Lovely, thank you, Bobby, and good afternoon, everyone. It's great to be with you all today. As Bobby said, my name is Todd Malone, and I'm the CEO at Digital Frontiers. Many of you may know Digital Frontiers from taking our Digital Frontiers Institute courses. We are a little bit different from a lot of the organizations that you've all engaged with over the years on financial inclusion. We've been around about 10 years, and one of the things that we decided to do quite differently early on was to bring in technical expertise from a range of different organizations. So we've worked with CGAP, we've worked with Accion's Center for Financial Inclusion, Senfree, Finmark Trust, obviously, the Tufts School, Fletcher's Flip Fee School, AFI, essentially everybody that's working in financial inclusion around the African continent. What we've done a little bit differently is that our team also has learning facilitator and education experts and digital delivery experts. So we make sure that how we're delivering is moving beyond what I think a lot of us are familiar with when we attend trainings. We watch somebody read a PowerPoint. We've all probably done that ourselves when we've done training as well. And so we've wanted to work with Finmark Trust to focus on delivering the foundational learning using really strong adult learning principles in a delivery mechanism that works for our target audience, which would be all of you and your colleagues and people working across the financial inclusion sector. And so when we started talking to Finmark Trust, we're really excited because we know that Finmark Trust has very, very deep understanding for financial inclusion in SADC and how we can advance the agenda. And we're very, very excited to be a part of this initiative that Bobby and this team are putting together. So thank you very much, Bobby. Back to you.
Thanks very much, Todd. So yeah, the team includes Pearl leading it, but a big part of this is actually that it's a concept that we're sort of introducing because we think it actually would make a big difference. It really is about taking training, but seeing how training is actually structured for impact, for long-term impact, and then applied to whatever the particular problems that the organization is looking at. So you can see there's foundational learning, as Todd said, it's experts, content experts, as well as digital delivery experts that is tailored to each individual, will take as long as they need to sort of cover through this. There's a flexibility. The sort of middle part is intensive use case development. So the idea over here is a 5-day in-person training. But the focus over here is that it's not just, as Todd was saying, about delivering presentations and just the content. It really is about structuring the training to the specific use cases that those who are attending want to, need to and want to actually implement in their organizations for that kind of change. So it is about intensive interactive learning, but it's actually structured to the particular use cases of the people that come through. The idea is that in the morning, there's a master class, which is sort of focused on a particular area. And in the afternoon are specific electives, depending on the focus of those who are attending. Some of the focused tracks are policy and regulatory innovation and digital product design. And the focus obviously is ultimately, the purpose is not just, okay, here's a certificate. It's like, what are you looking to implement in your organization? What is the use case that you want to take through? And then that goes into the third phase, which is the peer learning and support. So it's an ongoing, you've got your use cases, you're implementing them, but you're not implementing them in isolation. You're implementing together with your peer group, where there's that peer learning and feedback and support. You have your problems, you have your problems, you share them, just as over here we share some learning, but in this case it's not as general, it's far more specific on the particular projects. And then of course you have access to the kinds of tools and networks through us hosting it. But it's about building on specifics and building over a longer time where to see the actual impact of the training is going to take 2 years, and it's actually going to be about what the specific change you're doing in your organizations. Please go for it, Todd.
One of the things that we've all seen over the years is when you get really clever people in the room together, you should give them space to engage one another. And I think you all saw that earlier today when you got into your groups. It took a little bit of time to kind of get moving, but once everybody got moving, it was hard to stop the conversations, and the amount of information and the amount of learning that people were able to share is essential. And so the structure of using the use cases as well as the peer learning and support is really building off of that and helping facilitate those conversations. And one of the hardest things that is going to happen is that if you attend, you'll have to put this down so that you could sit and engage with your colleagues, because that time together is just so rich in making sure that you can get the full value out of that.
Todd. So just a little bit, this is obviously a concept where we're looking for the feedback. So the idea at the moment is it could be late in 2026, but it's obviously there's flexibility in terms of the audience. And as we see, yeah, it will be hosted in South Africa. It will be masterclasses and track-based use case development with experts in SADC and beyond, policymakers, practitioners, and these are the kind of partners that we're looking to. What we've got over here is also a QR code where you can see the sort of full brochure that's been developed. So that website and that QR code will actually show you the material and the idea. What we're looking for from this session is some feedback, just in terms of, this is a concept, but just to see how what you are thinking about it. So, things like, would your institution send staff? If you did, would you be prepared to pay for this? What sort of topics are missing? What are the topics that something like this would really be relevant? Like, if we were covering the following things, what would be really relevant to institutional knowledge in your organization, as well as to the specific problems that you're looking to solve over, let's say, a 2 or 3 year period? Like, what kind of information do you need to be able to take your organization to where you see it could be in 2 or 3 years? So yeah, this is a concept we're sort of introducing, but the main thing we're hoping for is just what you think about it, and also, is it relevant to you, and what would really make it worthwhile? So we are opening it up. So you can give us, if you're willing to, we can have a bit of a Q&A now. Anybody who wants to hear. We also have a survey that takes about 5 minutes. And so there's also a QR code that you can scan with your phone to implement the survey. There's also that link for it, but we're hoping that you can that each of you can look at that link. Also look against the previous QR code, which introduces the concept, and just tell us, answer that survey and give your feedback on it.
So should we give you 5 minutes to complete that survey? This one. So take 5 minutes and please complete it. You can ask questions if you want to in the meantime. Brother? We know who you are and who's not completed it. We can see you.
Master of ceremony, not really a question, but maybe a suggestion also while member states are responding to the QR code. If there are questions, as you have rightly said,
yes, of course.
Related to this discussion, I think they are welcome as well.
Yes, please.
We as SADC Secretariat, we appreciate the developments. You have said
we sent it to you.
Yes, so we appreciated the developments. This is aligned with the strategy, and it will benefit the member states. However, I think we will further engage in terms of the content, in terms of the details.
Sure.
But I think we should give also opportunity to engage the individual member states. If they have questions, this is an opportunity for them to ask about this opportunity and the pertinence also of the training, so that they are free to ask questions. Absolutely. Instead of us providing maybe too much information as well. Thank you.
Yes, no, I think that's rather, thanks for that feedback, because we did send the concept to the SADC Secretary. Obviously, it will be first prize if there's a partnership around it, because it, as you say, it feeds into our strategy implementation within the region. So I think that's great. That's welcome. Question?
Thank you. I wouldn't say it's a question, but maybe to add on to what Rado is saying. Malefo from the SADC DFRC, and our core mandate is delivering capacity to DFIs. So I think maybe it also, because I saw the part of the stakeholders that were listed, to have a conversation around designing some of the courses, because we also recently launched a DFA Academy that is trying to move away from classroom training to more practical knowledge sharing type of learning. So I think if we are going to be also capacitating financial institutions, it would be beneficial to also engage with DFRC.
The DFI.
Thank you. Yeah.
Thank you. Thanks. Good suggestion. Any other questions? The only reason we've put it in South Africa is cost. That's really the only reason, because I heard someone saying yesterday we must rotate these meetings. Flying to South Africa, flying all of you to South Africa is the cheapest. Otherwise, it's the cost. But if money is not a problem for you and your institutions, we can go anywhere. Mauritius, Seychelles. Are we all able to access it? Have we all completed? Mike, are you able to see who hasn't completed there?
You're going to send us around the room.
Yeah. Big Brother's watching you. And how many member states are there? 14, 15. Okay, I think that's fine. You can continue to respond. I think I'm just worried about time. We should set up a meeting with DFRC, I guess, as well as part of our discussions. But thank you very much. Thanks, Bobby, for that. So we will get the responses and we'll communicate levels of interest, and that will, of course, determine whether we move to the next step, which is about more detailed planning and looking at how we can pull it off. There's no reason why we can't, in the region and on the continent, implement our own financial inclusion capacity building initiatives, right? We, as Finmark, have been doing it for a long time already, together with the CCPG and the different trainings that we do. Digital Frontiers has been doing this for a long time as well. So we put it together in a way that benefits our member states. Yeah? Okay, so we leave this one. Please complete the questionnaire. You can access the more detailed brochure concept as well from one of those QR codes. Colleagues, we're coming to the last session of the day. So I think what we wanted to do now is just to have some reflections on how you, this is difficult now because I'm sure many of you weren't around for the last 10 years of the forum, but just to reflect on what you found useful in the forum and what we could do to make it even more impactful in the region. Has it been impactful? Should we be saying we want to have it for another 10 years, every year, right? So I'd like to get your reflections on that. If I don't get volunteers, I'll go country by country. Let's see whose first forum is this? Who's attending for the first time? Okay. Too many of you. I guess you can reflect on the last 2 days as well, as whether it's useful. What do you think we can do better? Who's going first? Rado, you go first. You were here at least for 5 of the 10, right?
Since the master of ceremony is requesting me to provide feedback, I don't have choice.
Yes. Get the ball rolling.
No, I started, I think, attending this forum in 2019. But when I was still working for the Ministry of Finance of Madagascar, yes, if I recall well, also I had the chance to attend one forum. I think what is critical is how we effectively implement the recommendations from the forum. We've got recommendations out of these discussions during the 2 days. We need to enhance effectiveness of the implementation of the recommendations. I think that is one way that we can improve as we go. Let me stop here because this forum is owned by the member states. We as SADC Secretariat, we have seen it useful, and we think that the decision of the Ministers of Finance and Investment to create this platform is quite relevant over the past 10 years, and is still relevant when we look projecting into the next 10 years. That's our view. Thank you, as Secretariat.
Okay. Thanks, Rado. I'm going to go to Lesotho. You forced me to do this, colleagues.
Thank you, Chair. I think I've already talked a lot about some of the challenges and possible areas of improvement. But when one looks back, when we started, I may have not been there when we started from the 10 years ago, but around 2017, I think, I would have been attending for the first time. I think we have lost a little bit of momentum in terms of where we could have been had we been able to continue. But I think the forum was very good for us to reignite the passion to start and continue on the journey that we started far back. What I can say, and as I do so, I also applaud member states, is that when one looks at implementation of some of the outcomes that would have come out of the forum, the previous forums, but also in line with the SADC strategic plan on financial inclusion and SME finance, I think member states did not stop. I think many of us continued with the implementation, and for that I wish to applaud member states. So it is clear that, as I said yesterday, money is not going to come from anywhere, at least in my own assessment, and so much more will should come from us as member states in order to sustain this initiative. So Rado, whether there are funds or not, we must keep the fire burning. Member states should commit, and at least from the kingdom, with a resolute leadership by the Minister of Finance and the current governor, I can assure you that resources will be available for us to continue to be part of this initiative. Thank you.
Okay, thanks. Okay. Eswatini? Where's Eswatini? Mr. Manyati? Oh, I'll come to you online. Mr. Manyati?
Thank you, Chairperson. I would request that you give the platform to the Ministry of Finance. I think my sister Kosi is here. Otherwise, from CFI, the forum is forever useful. We are mandated to monitor the implementation of the inclusion agenda in Eswatini. So we always rely on the forum for insights and knowledge sharing. It's a useful forum for us. But I would request, Chair, if you allow, that you allow somebody from the Ministry of Finance, because I think they are the member. CFI is just a baby of the ministry. If you allow, Chair.
Yeah, sure. I can't remember. Where's the Ministry of Finance person? Eswatini. You exposed your bosses now.
No, she's in attendance there. She is.
Okay, let's move on. Malawi?
Oh,
are you there?
Yes.
Okay.
Thank you so much from the Ministry of Finance, Eswatini. My name is Kosi Dlamini. Although it's my first time attending the forum, I am quite impressed on the movements that have been, the strides that have been taken since inception, like you are talking about 10 years. And we are pleased as the ministry with the financial, the Center for Financial Inclusion to ensure that we support the initiatives, we support the meetings, and through the Ministry of Finance, our finance minister, we can assure you that he is with us and he is in support of every move that we are bringing forth to him. And we promise to keep up with every stride that you are continuing to take. Thank you.
Great, thank you. Online, I can't see your full name. Can you go for it? You've got your hand up. I don't know what the name is.
Thank you, Chair. Can you hear me?
Yes, we can hear you.
Yes, thank you. My name is Mahautam Pahlele. I am the Executive Director at the South African Credit and Risk Reporting Association and also a member of the Financial Sector Conduct Authority Consumer Advisory Panel. It was my first time attending the forum, and very interesting to see what's happening at country level. I think as an industry association, we are doing work with some of the member states who have come to benchmark the credit and risk reporting framework in South Africa. I think a few months ago we hosted the Reserve Bank of Lesotho, and we've worked with Botswana where they've wanted to implement issues around credit reporting, credit bureaus, how you set up the infrastructure and so on. So where I'm sitting, I'm thinking, since it's my first time, I'm not clear how the forum works and where industry associations fit in to continue the relationship and to feed back into other processes where some of these things can be, we can contribute. I mean, the other thing I've noticed, there is quite a focus on small businesses. One of the projects that we are involved in as SACRA is to try and introduce a national centralized framework similar to consumer reporting that we have now for business information reporting, where currently, as people have spoken in the forum, a lot of small businesses, when they take out credit and finance, they do so in their personal name, but they are not able to build a profile in their business names. And some of the challenges that we are experiencing relating to, for example, their identification and separation from their personal to their business, and so that they can build business profiles. We are talking to the regulators, and industry has agreed that we need to introduce reporting to the credit bureaus from the business side. So it's just an example, and I think it would benefit us and maybe the member states if we are able to share where we are, what we are doing, and to maybe collaborate. So yeah, I wanted to understand how associations like ours fit into the whole process. Thanks, Chair.
Yeah, thanks, Mohauta. I think we're quite flexible on the involvement of especially industry associations. In fact, I would encourage that we have more associations participating, and we have in the past. So Banking Association, Maxine is as a co-host, but we need to get other associations on board as well as Mohauta. The topic of credit information is critical for SMME access, especially. So I think as we go along, those are the topics that we will need to include in our future forums and get you to come and facilitate them and share kind of knowledge and get feedback from the region as well. So I think you are welcome. The forum is open to you to participate as a full member, as we go along. So
thank you.
Yeah, no, absolutely. Thank you. Any other countries want to contribute? I'm worried we're running out of time now very quickly. The director.
Thank you very much, Chair. First of all, I would like to congratulate and appreciate the work that you have been done in this 10 years. It's a milestone. And I think this session that will be coupled with the responses from the questionnaire from different member states is going to help us to assess or evaluate well how we have done through the 10 years. And we should be able to make reflections onto the strengths during the 10 years, what we have done well. From the 2-day sessions, I have tried to list some of the aspects that I think the members of this forum, since the 10 years ago when they founded the action, managed to do well. From the presentations of the member states and the activities that they have done, I could find that you did very well in raising awareness campaigns in member states. It was reflected in their presentations yesterday. You also did very well in lobbying and negotiation capacity with SADC and member states, because you managed to have this included in RISDEP, which is the strategic instrument for SADC. And you also have managed very well to deliver to member states a cohesive vision to the objectives that are intended to be achieved with the financial inclusion framework. This is another aspect that I've seen from this forum that I think it needs to be very well capitalized. However, along the process, there are also challenges that can be, in my opinion, that can be looked at. And if member states also going to answer, please share with us all the challenges so that we try to address them and have them well said into the report, and with proposed recommendation strategies to overcome them. I've got some of the challenges that I could see. The first one is what Rado has said, the implementation of the recommendation. This is what I got from here. And now we need to see how we have to address from today onward. How are we going to monitor the implementation of the recommendations? How are we going to also make sure that there is a regional framework that monitors and evaluates the level of implementation of the recommendation amongst member states? And this implies an exchange of information between member states with the forum, including the SADC as well. The other one is the discrepancies of member states, this in terms of status of the implementation. That was very well reflected when member states were presenting yesterday. We could see that they do have discrepancies in the level of implementation, and it's obvious this is expected because countries, they do have different development specifics. And we need to see how are we going to address, because this is a fact of regional area. SADC region has got those different levels of development. And the last one is my question. I want to understand how this forum, I mean, if there is any framework, regional framework for the financial inclusion, where it has its objectives. If it's phased, for example, 10 years have finished, we are assessing ourselves. Then in what level do we expect to be in 5 years to come? This is one of the questions that I have. And the other aspect is, if in the framework there is any conceptual approach to coach, to monitor the adherence of member states to the recommendations, and to monitor the maintenance strategies to keep member states aligned and keep in the program, and the data management, including the cyber security. That was very well debated today in the sessions that we had. These are the last aspects that I had to say. And thank you very much for this insightful forum that we had, celebrating the 10 years, and congratulations to the work that you have done. Thank you very much.
Thank you very much, Director. I think you've done my closing remark job for me. I don't have to do it again. But the questions you're asking are questions that we all need to be considering and answering. If there's nobody else who wants to comment, we can start wrapping up the session. Right? Good. You all look very tired. So as I said, Director, I was meant to give the closing remarks. I do have a formal closing remark, which I will send to be included in the report and not go through it now, but I'll make a few points, just a few points in closing from where I am sitting. It's clear that we've made progress over the last 10 years, just looking at the numbers of inclusion from 50% to 75% to, where we're standing over the last decade. And that progress has been made in the area of access. When I look back at 10 years ago, the conversations we were having are completely different. When we started the process, we were not talking about outcomes. We're talking about access and the regulation required to enable that access. So the session we've just had on financial health, the reason that that's come to the fore is because we want to understand how does this financial inclusion make a real impact in people's lives. And yesterday, the director, as well as as Arif, again raised the issue about our challenge for financial inclusion to make a real difference in people's lives, not just give them a bank account. 10 years ago, we were definitely not talking about DPI. We were talking about e-KYC, customer due diligence, but not the DPI conversation we're having now is completely new. We were not having those conversations. We also have a much stronger emphasis now on SMME access to finance than we did 10 years ago. It was mostly about consumers. Our switch to say, how does this access make an impact on economic growth and people's livelihoods? The SMME agenda becomes, has become front and center. Director, I'm not even talking about the successes on advocacy that we have done over the last 10 years, just the kind of conversation and how this conversation has moved to where we are. So all the challenges that you are posing to us are challenges about the relevance of inclusion and how do we need to do it. So you've heard the conversations today involve so many different people that are not involved in financial inclusion. This discussion about digital identity and e-KYC, one of them was from the central bank, but the other one was from, I can't remember where she was from. But the point is about financial inclusion on its own doesn't solve the problems, that we need to be collaborating with other government departments. So the other one that came out strongly is the communications regulators around data privacy and all of those things. We never had those not conversations we were having because we were at that time. We are now realizing that it's an ecosystem you're talking about. People don't have proper identity and being able to prove who they are. They can't get access to formal financial services, right? So as we go along, this thing becomes a lot more complex. But the current focus of our work needs to be on how does it improve people's lives, in a real practical way, and that's what we need to now be measuring, and that's the complex and very difficult part, because it says we need to think differently about these outcomes as we've had the discussion around financial health, but we also need to be thinking about who else do we need to be working with at country level, at a local level, so that all the necessary parts come together. We are calling that financial inclusion 2.0 to distinguish it. Just briefly, from a regional programming perspective, we've had some reflections over the last 2 days around it. We have the strategy, we have the financial inclusion strategy. Director, a lot of that strategy sets out some of the targets, the strategic objectives where we want. It's not a long list, a list of indicators. I'm not sure if it has targets, Tamon, the strategy. Indicators as well as targets. So all of the things you talked about are contained in there. We have the strategy, it's our strategy, we developed it together. The challenge is, how do we implement this strategy? How do we implement it together, and what resources can we rely on to facilitate that implementation? We've done quite well, I think, over the last 5 to some odd years with very little external resources. We've used our own resources to do it. And I'm glad the colleague from Lesotho is saying they will fund a lot of this work happening. Let's hope the other countries have the same. But resources don't only refer to financial resources. It also refers to the institutional, organizational resources we have in this region. Makhauta talked about her institution around credit sharing. That's a SADC institution. We should be using those institutions a lot more and coordinating them to make the kind of impact we want to make. And I think the SADC Secretariat has played a key role in this process over the last 10 years. Their challenge is to see how do we coordinate all of these different resources to make the kind of impact we want, and to bring them under one regional umbrella that says we're all marching to the same conclusion in this region. And I think so far we've done it well, but there are more institutions out there. I'm glad to see University of Johannesburg at the back there. But, academic institutions in the region are also important. Yeah, I think, Director, we're glad to see you. You are here. We're glad to see you stayed for the 2 days, and the commitment that you've given to this work. I think it's important that we get the leadership from the SADC Secretariat. So thank you very much for that, and for the ongoing support, Rado and team. Maxine from SADC BA has always been a partner with us. And we hope we'll be doing this for the next 10 years and showing more and more results as we go along. It's been a wonderful 10 years, actually, to have been as part of this process. So thank you very much. Thank you all of you for making the time to participate and for participating energetically. We can see the commitment to the agenda, and I'm glad to see so many new faces, because there's a new cohort of soldiers that are taking us to the next battle. Some of us may fall, Maxine, we may fall by the wayside. 10 years is a long time, but glad to see there's a new generation of people that are coming through to take this work forward. Colleagues, the only thing, someone is saying something there, but the only thing left for you to do before we say goodbye is to do the, what do you call it? Assessment form that you can access through your QR code. Thank you very much, and give yourselves a round of applause. Thank you. You want to say something else?